Welcome, fellow traders. Let me guess, you just had a bad trade. Maybe you followed your plan perfectly, but the market moved against you and now you are questioning everything. You might be feeling a deep sense of failure, wondering if you are even cut out for this demanding profession. This feeling of shattered confidence is incredibly common. We have all been there, staring at a red number, feeling the weight of a loss. Trading is an emotional roller coaster, and it is easy to feel inadequate, frustrated, or even an overwhelming urge to get even with the market. But here's a core truth you need to internalize. One bad trade does not define you as a trader. What truly defines you is your trading discipline. It is the unwavering commitment to your process, regardless of the outcome of any single trade. In this video, we will explore the deep psychology behind losing trades and provide you with actionable strategies. You will gain a clear understanding of your emotional reactions to losses. We will give you a practical roadmap for emotional control and discipline. Our goal is to help you achieve consistent and confident trading. A losing trade is more than just a financial setback. It triggers a profound psychological impact. The pain response is activated, often leading to a primal fight-or-flight reaction. This can quickly lead to impulsive decisions that undermine your long-term success. Common emotional reactions surface almost immediately. There is the fear of losing even more, or the fear of simply being wrong. Then, greed often creeps in, a powerful desire to quickly recover losses, which can lead to incredibly risky behavior. Finally, anger can boil over, directed at yourself, the market, or even your carefully constructed strategy. These emotions have severe consequences for your trading. Your judgment becomes clouded, leading to irrational choices. You might engage in revenge trading, chasing losses with larger, unplanned positions. Over-leveraging becomes a tempting but dangerous path. Ultimately, you abandon your well-thought-out trading plan, which is the blueprint for your success. This creates a vicious cycle. A loss leads to emotional reactions, which lead to poor decisions, which lead to more losses. This cycle is a primary reason why many traders fail to achieve consistent profitability. Breaking it is essential for your trading journey. Trading discipline is simply the ability to stick to your plan, regardless of your emotions. It means making rational decisions even when your gut is screaming otherwise. It is the consistent application of your rules, day in and day out. Think of your trading plan as a detailed roadmap for your journey. Discipline is the GPS that keeps you on that path, recalculating when necessary but always guiding you toward your destination. Without discipline, even the best roadmap is useless. Key components of discipline are foundational. You must predefine your risk, knowing the maximum loss you're willing to accept on any single trade before you even enter it. You must stick to your entry and exit rules without second-guessing or emotional interference. Most importantly, you must manage your emotions, recognizing triggers and employing coping mechanisms to stay in control. Discipline is not about avoiding losses. It is about handling them correctly. It is about trading like a professional, even when the market tests your resolve. This unwavering commitment to your process is what separates successful traders from those who struggle. Building unwavering discipline starts with a solid foundation, a detailed trading plan. This plan is your blueprint for consistent trading. It must clearly define your entry and exit criteria, leaving no room for ambiguity. Your plan must also include robust risk management rules. This means precise position sizing guidelines, ensuring you never risk too much on a single trade. Write this plan down, review it regularly, and commit to following it without exception. Next, make journaling your trades a non-negotiable habit. Track not just the financial outcome, but also your emotions and thought processes before, during, and after each trade. This practice is invaluable for identifying patterns in your behavior and recognizing your emotional triggers. It turns subjective feelings into objective data. Always predefine your risk before entering any trade. This means knowing your exact stop-loss level and your precise position size. This decision must be made when you are calm and rational, not in the heat of the moment. Once set, adhere to these limits strictly. Never deviate from them. Finally, practice mindfulness to cultivate emotional awareness. Learn to recognize emotions as they arise without judgment. Simple techniques like deep breathing or stepping away from the screen for a few minutes can help you regain composure. The goal is to observe your emotions, not to be controlled by them. It is crucial to acknowledge that losing trades are an inevitable part of trading. No strategy has a 100% win rate, and no trader is immune to drawdowns. Do not let these losses define you or derail your progress. They are simply data points in a larger statistical game. Embrace continuous improvement as your guiding principle. Learn from every mistake, whether it is a losing trade or a lapse in discipline. Adjust your strategy when necessary, based on objective analysis, not emotional reactions. Always maintain forward momentum, focusing on growth rather than perfection. Shift your focus from profits to process. Celebrate the small wins of sticking to your plan, even if the trade itself was a loss. Avoid self-punishment for losses. Instead, view them as learning opportunities. Emphasize consistency in your actions, knowing that consistent process leads to consistent results over time. Developing emotional control and unwavering discipline is a journey, not a destination. It requires consistent effort, self-awareness, and resilience. But with dedication, you will attain the discipline needed for long-term success in the markets. This is how you transform from an aspiring trader into a consistently profitable one. We have covered the essential roadmap to building unwavering discipline in your trading. Remember, one bad trade does not define you. Your discipline does. It is your commitment to your plan, your risk management, and your emotional control that will determine your success. Embrace the psychological challenges of trading as opportunities for growth. Understand that every loss is a chance to refine your process and strengthen your resolve. Do not let emotions dictate your decisions. If this message resonated with you, please like this video and subscribe to our channel for more insights into trading psychology and strategy. Hit the notification bell so you do not miss our future content. We would love to hear from you. Share your biggest mindset challenges in the comments below. Keep learning, keep growing, and keep applying that discipline. Happy trading.